Enrique, you have just rejected another offer from Xerox. It feels like this is a sort of recurring theme. What will it take to get HP to accept an offer?
Actually, we have rejected the offer for 3 reasons. First, because it undervalues the company. Second, because it creates a very risky balance sheet. And third, because it uses very high synergies that we think are unrealistic to validate the deal. So because of the 3 reasons, we have rejected the offer because we don't think it really creates value for our shareholders.
And one of your complaints against Xerox, and indeed the board have said this on a number of occasions, is that they are a company that is in significant and potentially even terminal decline in terms of their own business. I think you've characterized them as a desperate buyer. They need this deal to survive. How can you be confident of that without having conducted due diligence on them?
Well, what we can see is what has been the revenue evolution of the company, and we can see a clear negative trend. The best way to estimate that is to understand what is their total contract value, because they have a contractual business, so it's relatively easy to predict where the business will go. And this will be a key piece of information to let us understand what will be the performance of the company going forward.
And one way to see that information would be to make an offer for them, put a number on the table, get due diligence. You can always change your mind afterwards. Why not do that?
Actually, what we have said is we need to address the 3 problems we have seen today. We need to make sure that the value exchange of the 2 companies is right. We need to, whatever the combination is, the capital structure needs to make sense for the businesses that this company will be driving. And third, Synergies needs to be realistic. This is the conversation we think we need to have before any discussion about combination really happens.
In terms of just the pure logic of a combination, I mean, look, the printing business is a part of HP. It's not the most significant part, but it is a part. Do you see long-term that it would make more sense to combine with Xerox so you do have an expanded platform there?
What we have said is that we see logic in driving consolidation in the print market. We actually started to drive that 3 years ago when we bought the Samsung printing business. So it's not only that we have said there is an opportunity there, is we have been the first company driving consolidation. We took a company that was losing money, and it was accretive for us the first year, but also help us to grow into spaces where we're not operating. So we think consolidation makes sense, and we are open to explore that opportunity.
And I'm interested to know how it's been for you personally. You came into the CEO role here in November. You've been at HP most of your career, I think 30 plus years, and immediately you find yourself in a hostile situation. You have Xerox and Carl Icahn on one side, and you and your company on the other. What have you learned from it?
I think the key thing is the importance of being focused. This has been the key thing we have been driving in the company. We need to make sure that we continue driving the business forward. We need to keep our connection with our customers, with our partners, making progress, and the results that we had in Q1 really show the ability we have had not only to stay focused, but really to continue to make progress in our businesses.
And that's an interesting thing, because I think we're so focused on the deal or the potential deal here that a lot of the time we lose sight of the fact you are running day to day a significant company, many employees around the world. Let's just switch on to what is going on there. Coronavirus, obviously a huge story for all businesses. How is it affecting HP?
Actually, as you said, HP is a very big company, and we have many parts of the company that are really not related to this transaction. We said last week that coronavirus is having an impact on our overall business, mostly driven by the manufacturing side. After Chinese New Year's, the manufacturing ramp in China was slower. We are recovering, but we said that this was going to have a temporary impact in Q2, that we expect to recover in Q3 and Q4.
I mean, Apple came out yesterday and warned that products and some of the products they actually use for their equipment is going to be slower, going to be harder to achieve going forward just because of the sort of the tail of this virus. Is that something that HP is also experiencing?
Well, we said last week that it was going to have an impact in our ability to manufacture products in Q2. What we have seen so far is meeting the plan that we had, and we went factory by factory assessing what was going to be the ability to manufacture products in Q2. So things are going as we were expecting last week, but also we need to accept that the situation is fluid, and every day we get new news about what is going on.
So beyond the illness and the fight with Xerox, as I say, you've been in this job not very long. You obviously have a vision for where you want to take the company. Looking out a few years, where do you see HP going?
Actually, I'm very confident on the future that this company has. We presented our plan a week ago, where we show the ability we have to create value for our customers, and it's driven by 3 things. First, the ability that we're going to have to reduce our cost structure to be more efficient, the value that we are going to get from our businesses as we will advance our leadership and continue to grow our value both in personal systems and print and create new businesses, and also by using our balance sheet to create value for our shareholders. We have great pockets of growth in the company driven by innovation like 3D printing, like gaming, like a full transition into services that we think are going to position the company in a much stronger way 3 years from now.
Talk to me about the balance sheet, because as you say, you're returning a lot of money to shareholders, I think $15 billion or so. Could you not use that money more effectively in M&A?
Well, what we have said is that we have a plan to return to our shareholders $16 billion in the next 3 years, which is about 50% of our market cap. We think that this makes sense to do because we think the HP share is undervalued, and when your share is undervalued, buying it is a great way to capture value for your shareholders, and this is why we're doing that.